Welcome back to another weekly Forex forecast, everybody. Just wanted to give a quick shout out to some of our members who caught some beautiful supply and demand zone trades this past week. Just wanted to give them a quick shout out. With that being said, let's get right into this week's Forex forecast. So on the dollar, we saw the dollar have a pretty good week to the upside here. And why is that? Well, I've been talking about this weekly demand zone and this overall monthly demand that is in control right now on the DXY. So in my opinion, that is why we are expecting to see some strength here in the dollar. And even if we do continue to see strength, we break this high here, we have a lot of room to go up to this supply zone at 103.06. So I think that is where the bigger move could take place. Obviously, that's many months away from now. So I just wanted to point out that we have a higher time frame monthly demand in control on the dollar, and that is why I have been pretty much bullish on the dollar. There has been a few weeks where, we couldn't deny the weakness of the DXY. With that being said, let's go down to the lower time frames and see what's taking place. I know the daily chart is not a lower time frame, but it is lower to the weekly, so that's why I'm talking about it. I was telling members this past week, we are sitting at the low here. And as we broke the 4-hour trend line, so this is the daily chart, we are just, if you just look at it in like the highs and the lows, we were obviously more towards the lows, which is definitely a sign that we could see some dollar strength. Not enough evidence for me to suggest that. However, when on the 4-hour chart, we broke this downward trend line very cleanly. And not only that, we continue to push to the upside here. When we got this trend line break, that was evidence number one for me to suggest the dollar could see some strength. Combined with the fact that we have monthly demand in control, this was definitely a positive sign. But the real evidence to suggest we are going to continue to go up is when we broke this high. Why? Not just because we're breaking a high, because we actually have a very clean upward trend line right now on the 4-hour chart. So that is sustainable to me. Trend lines and trends are what sustains price, not just some momentum here and there. When we break highs, create lower or higher highs, trend lines, very powerful. That is why I was telling members, as soon as this high was broken, we could expect to see some dollar strength, and we did get just that. We are definitely overextended though. If you look, if we view this as a channel, this channel too, I've just been loving lately, something I've added into my trading at the end of 2025, and I'm going to continue to use the channel tool to show you guys what I'm looking at. We are at the top end of this channel right now. So it's not to say that price can't keep going up. I mean, we've seen it so many times where price just continues to go up. We're so overextended, breaking above a channel. Just because we're at the top of the channel doesn't mean we should see price pull back to the downside. But just, based off of a probability game, it is more probable that we could see some dollar weakness. So we could expect to see some the DXY maybe pull back to below 99 again. And then at that point, that will be our higher odds time to be looking for longs on the DXY. But for me, I'll be watching that channel and this upper trend line on the 4-hour chart on the DXY to see if it can continue to hold. And as long as it does, we will remain bullish on the DXY, looking to target the liquidity on the daily chart over here. Let me just draw it for you guys. Looking to target all of this liquidity over here on the daily chart. That's where I think we are headed if the 4-hour trend line continues to hold on the DXY. Alrighty, onto the forecast for the Euro US dollar. We got a nice reaction off of our daily supply. Definitely not an area I was expecting to see a price react off of for two reasons. It was tested twice. Twice. This was a third test. Now, I'll be honest, I don't trade at tested zones, so it was a little bit shocking to me to see such a powerful move off of the supply. Clearly, there's a lot of supply up there. So if we do push up, if we break this supply, any demand there is going to be a very powerful area of demand. So that's what we'll be watching if price does pull back up to there. On the daily time frame though, on the euro, we have clear liquidity down here, so with a demand zone sitting right below. So I think it's a high probability area we do see a move off of this daily zone. The question is how big of a move. So that's what we'll be deciding, or that's what we'll be trying to figure out once price does hit that daily demand zone, if it does. In the meantime, I don't really see a whole lot of trading setups as far as supply and demand zones go, but as far as a 4-hour trend line goes here, we have a very nice downward trend line. But the issue is we are sitting below 50% mark of this channel. So I think if price does push to this 50% line and above, floating in this part of the channel, the upper part of the channel, I think that's a great time to continue to look for shorts with this downward trend line on a 15-minute time frame. That's what I will be doing here on the 4-hour time frame on the Euro US dollar. As far as a 1-hour chart goes, I pointed the zone out to the members. Not really the best zone though. you can kind of see we almost have liquidity here now. It's kind of quite interesting. It's not really a zone that stands out to me. It's not really that powerful. We'd almost got to pull back. So if price does pull up to this supply, you can look for a short here. I'm personally avoiding this set and forget trade, and who knows, it's happened so many times where I avoid it and it bites me in the butt, and that's fine. It's just not my favorite zone. Doesn't really stand out to me. So if you want to trade in this zone, I would just wait for the zone to be contacted and then look for confirmation on a 5-minute time frame. If you don't know what confirmation trading is, I did a whole course in 2025 on confirmation trading that you guys can watch that will show you exactly what I would be looking for once price does hit this 1 hour area of supply. All right, on to the forecast for gold. You guys know we pointed out this daily demand zone as soon as it was formed pretty much. So you guys can go back and confirm that in a couple forecasts ago. So beautiful move off of our daily zone. Trend line came in contact as well. Very, very predictable move. And I predicted it before it took place, not just hindsight like most of these trading gurus here on YouTube. So nice trend line to the upside, nice reaction off of our daily demand. To me, it looks like we are headed to break all-time highs on gold. So it's longs all the way. We cannot deny that here on gold. As far as trading it goes, if we look here on the 4-hour time frame, we already got a nice little quick counter trend short trade off of this zone, and it definitely went more than I was expecting. I was telling members if you want to get in short, and I think I was telling you guys last week in last week's weekly Forex forecast, if you want to short at the zone, aggressive trade management is definitely needed, meaning 1-to-1, 2-to-1 max. Looking to move your stop from break even, or moving your stop loss to break even as soon as possible. And that is why we do that, because yes, we did get a nice move off of it, but not a massive move. To me, the bigger moves are going to be happening at demand zones down below due to the nature of the higher time frame trends. So if we do get a pullback down to this 4-hour zone, I think it's a great opportunity to get a massive potential swing trade long if we do in fact pull back to that 4-hour area of demand. So beautiful move off of our supply zone predicted in last week's weekly Forex forecast. If you guys want to continue to watch this and catch these free trades, just hit that subscribe button. That's all you need to do. And make sure you like the video if you are enjoying it. I do these forecasts for free, pointing out these zones for free for you guys every single Saturday. So I would always appreciate a thumbs up and a subscribe if you guys are new to the channel. So as far as a 4-hour chart goes here, we actually have a trend line I have not drawn yet on the 1-hour chart. So it is looking very strong. To me, it is looking like this supply zone is going to be removed. If it does get removed, any demand there is going to be a nice trading setup. But like I said, the preferred zone is actually down below. If you want to get a little bit aggressive, as long as this 4-hour trend line's holding, guys, it's really day trading longs all the way, in my opinion. A channel view shows we are just about to hit the 50% mark here, so I would prefer to do that right now or just below the 50% mark. Looking for longs, like I said, on a 15-minute time frame to me makes the most sense. It is a little aggressive because we are sitting at the high, we are sitting in supply. However, the weekly chart and the daily chart are really just showing us nothing but strength. So that's why I do prefer to look for longs on gold. So again, as long as this trend line's holding, it's going to be day trading longs all the way here, guys, 100%. On the 1-hour chart here, we are reacting off of an older supply zone. So you could also be viewing it on the 1-hour chart. If we do push up, if we break this supply, any demand there is going to be a very nice trading opportunity as well. I do prefer the 4-hour chart view as it is just more cleaner. So for me, as a swing trader who prefers longs, I'll be waiting for this supply to be removed or waiting for pullbacks down to our 4-hour area of demand on gold. All right, looking at the forecast for the S&P 500, we clearly have targeted the liquidity above here. We are at all-time highs. On the daily time frame, I do much prefer this overall trend line, as to me, it does to me show me at least the bigger picture, you know, where we are sitting at. But this past week, we did create a new trend line on the daily chart, and it is very aggressive, right? It's very steep. So it wouldn't surprise me to fake out below the trend line and then see this trend line continue to be respected due to the fact that we're trending on all time frames in the higher time frame. It's looking very, very strong right now on the S&P 500. So just wanted to point out this daily chart looking very strong. We are at all-time highs, but we got to trade with the trend, guys. It's really that simple, and that's why we were trading at this 4-hour area of demand. You can see right here, 4-hour demand zone, beautiful pullback, targeted the high. You can really just continue to hold this trade which is definitely preferred because we're at all-time highs. All the time frames are trending. You can definitely hold this trade pretty much as long as you want, as long as you can, really, because we're trending on the higher time frame. So beautiful setup here, called out before the trade took place in the daily market breakdown video, as you guys can see on the screen right now. And these are the forecasts that I release every single day for the Diamond members. If you want to trade alongside myself and the members, join the Diamond membership, where you will have access to the 38-page supply and demand zone PDF, which will be your complete trading guide, the daily market breakdown videos, which are forecasts that I release every single night for the members to trade alongside myself, step-by-step video lessons A to Z covering everything you need to know on supply and demand trading, the Sunday strategy Zoom session where members submit homework, and it's an interactive 1-hour call where we go over all of your homework and every trading related question, private access to myself inside of our private Discord group where I answer all of your trading related questions, and finally the Sunday live stream forecast where we break down over 30 markets together. And it's not just me. Here are some of the members and some of their trades they've been taking lately, absolutely killing it. And we also have some amazing reviews from some of the past members sharing their experience within the group. So if you're ready to trade alongside myself and the community, join the Diamond membership today. Links in the description down below. So this 4-hour demand zone trade has worked out. As long as this 4-hour trend line's holding, 15-minute time frame longs are going to be good here, guys. If price does pull back this demand again, I will not be trading at it. That trade has already taken place. However, if we do get a pullback all the way down to this demand, it's another trading opportunity, in my opinion. This purple box represents potential support. I would like to see another reaction off of this support to prove there is liquidity here, which would show stop losses here, right in our demand zone where we'd be looking for buys. So if we do get that deeper pullback, that is the next zone I'm seeing at 68.11 on the 4-hour time frame. If you want confirmation there, could be good as well on the S&P 500. On the 1-hour chart, we actually had a 1-hour supply I was pointing out to the members as well, and did get a small move off of it, but I was telling you guys, you got to be aggressive with trade management. I personally never trade short the S&P 500 because it's one of my only rules where I don't take a certain position on a certain currency pair, market, whatever you want to call it, because these markets are designed to go up. So that's why I don't short at these zones. That's why I was looking for longs, and it worked out beautifully this past week. If we do get a pullback down to this demand zone down here on the 1-hour chart, I think it's an area we could see a small move. I think the bigger move is going to happen at that 4-hour demand zone that's sitting down below. So if price does pull back to this demand zone, this would be our nearest 1-hour demand zone for a long trade. And I wouldn't mind seeing another reaction off of this liquidity to really prove there's liquidity there. And then again, aggressive trade management will be needed here at 68.87 in my opinion. I'm talking 1-to-1, 2-to-1 max, looking to move your stop to break even as soon as you can. Just due to the nature of the higher time frames, I think we could see a deeper pullback if we do get a pullback down to that zone. So aggressive trade management with that 1-hour zone. And for now, it's really longs all the way. We just need to continue to look for longs as long as the 4-hour trend line is being respected. And then, like I said, pullbacks down to the 1-hour demand zone. And then the better demands on the 4-hour chart are going to be good as well on the S&P 500. Alrighty, on to the forecast for the USDJPY. You guys see here we clearly targeted the liquidity on the daily time frame, and that has given us, in my opinion, a very sustainable upward trend line. I was talking about this trend line here a couple forecasts ago, saying it's very steep and aggressive. Wouldn't surprise me to see a fake out, and we did just get that. So at this point, this trend line is very sustainable, in my opinion. This is showing a lot of strength. And we targeted the daily liquidity. Now, I think the next thing we are going to be doing is targeting the weekly liquidity up above, pushing into whatever this price is, into the 160s. I think that's where we will be headed on the USDJPY, since that is the nearest liquidity on the weekly time frame. On the 1-hour chart, I missed this trade, but beautiful reaction off this 1-hour zone. Picture perfect trade. Again, I was a little bit late to it, but one of our members caught this trade, so congrats to you. Great trade, perfect. I mean, somebody messaged me on Instagram who used to be in my group, said they cut a 6-to-1 off this trade. So amazing way to start the year. Happy for everybody. Very aggressive now. This is not really when you want to be buying, in my opinion. It's kind of makes me nervous. The time to be buying was down here. So that trade's worked out beautifully. Congrats to the members who caught that trade. At this point, the way I'd be trading in this is I'd be looking at this 4-hour trend line. If you look at it as a channel, you can see we are very overextended. Not only did we push into the upper part of the channel, we pushed above it. So it's definitely not a time to be buying, in my opinion. I think we got to wait for a pullback, be patient, wait for this 50% mark here, or wait for below, and then we can continue to look for longs on a 15-minute chart. And like, let's say you take a loss on that. That's fine. Let's say this trend line, we push down, we break the trend line. We want to hold off on longs until this 4-hour demand zone is hit. Then we can hop on longs again. And that would be a great dip buying opportunity. Target all the liquidity down here. I think it's a great zone at 154.76 if we do get a pullback down to there. It's very possible that this trend line holds and we continue to push up. So again, 15-minute time frame longs are good as long as this trend line's holding. I just think being patient, waiting for this area to do it makes more sense to me on the USD JPY. Alrighty, on to the forecast for the GBP USD. Not my favorite chart right now, if I'm being quite honest with everybody. We do have a daily demand zone down below. I forgot to draw now that we have removed this supply. So there is profit margin on the downside if you are bearish on the pound at to 1.32. At this point, if you are short and price does pull back down in the zone, that's where I'd be looking to wrap up the trade, or at least be more aggressive with trade management, because it's definitely an area where we could see a decent pullback on the GBP USD. So lots of profit margin to the downside if you're bearish. The issue is on the 4-hour chart and the 1-hour chart, we really have nothing going for us. On the 4-hour time frame, we had a pretty good 4-hour demand zone here. Remove supply, remove the high, great move away, and then we pretty much blasted right through it, unfortunately, and that was a loss, and that's fine. Losses are going to happen, guys. I always try to keep it very realistic here on my channel. If you want realistic tips, this is the channel for you. I don't show my cars, my watches. I don't show any of that. It's just pure trading education here, and we keep it very realistic. I'm not pretending like I'm turning a $50 account into a $50,000 account. That is impossible. So I'm sorry about the little rant. Losses do happen, and that one was one right there. And unfortunately, we didn't create any supply that removed it. Usually when demand is removed, we will create some sort of supply above. And I was going to say, it could be a great shorting opportunity. The issue is there's no supply here. So this is a great lesson for everybody. As far as the pound goes, this upcoming week, I'm not looking to trade the pound. I highly doubt there'll be any good setups. There's many other markets that are definitely looking better than this. This is just one of the ones where I'm not looking to trade it at all. So you got to be open to trading different markets. You can't just be married to one market. Oh, I'm going to short. There's nothing here. So that's why I always keep these same markets on the forecast, because if there's a week where 2 out of the 10, 12, whatever, how many markets I forecast, if there's no setups, I like to just show you guys, look, I'm being patient on this one. I'm not trading it. So that's what I'm doing right now in the pound, just simply waiting for new zones to be formed or trends, because I'm not seeing a damn thing right now. Alrighty, on to the forecast for the USDCAD. We saw this thing base out very nicely, push up almost in a 90-degree angle. And I mean, we are kind of due for that, right? I don't like to say we're due for anything, but, you know, it was pretty overextended. It doesn't surprise me to see a push up. This is actually a very clear chart to read. I absolutely love it. We have a weekly supply above, not my favorite zone, at 1.39. And then, in my opinion, that's where we are headed. It's very obvious that's where we are headed. And it's very obvious as well that this is where we could hesitate and push down. So as far as longs go, which I'm going to point out some long setups in a second, our profit margin is limited, guys. It is limited because we are going to be contacting this weekly supply. So if you want to get in long, which again, I'm going to point out some setups, we got to be aware of this supply zone above and aggressive with trade management and be looking to wrap up the trade due to the fact that we could see a spike off of the supply zone. And look, price could just blast through. And that's why I'm a big believer in just bumping your stop loss instead of just looking for a take profit, due to the fact that sometimes the zones blast through. So as far as trading this goes, it's extremely clear. Beautiful 1-hour trend line, holding up nicely. If you do a channel view, let's take a look at where we are at in this channel. And in my opinion, that is where we are at. We are at the upper end of the channel. So I would prefer a pullback to the 50% mark or lower to continue to look for longs on a 5-minute time frame. Beautiful trend. Definitely want to be trading long with that trend with the clear profit margin up above. So that's what I'd be doing on the 5-minute time frame, as long as this trend line is being respected. Again, I would rather wait for a little bit of a pullback to be doing that as well. If we break the trend line, that's fine, because where I think we are headed is to this very good 4-hour demand zone that is sitting right down below. Let me just take up my drawing tool. So if we do get a deeper pullback, it's a very good 4-hour demand zone at 1.38. Removed the supply zone. The basing is very good, and the move away is very good as well. So I think it's a great pullback entry for a long trade. But listen to me very carefully. So let's say we push up and we hit the weekly supply I was talking about first, and then we pull back to the zone. At that point, this trade becomes much lower odds, and I would be looking for less of a larger trade. I'd be being aggressive with trade management due to the fact that a weekly supply is in control. So the best situation now would be get the pullback first and then pull up to the weekly supply, rather than hitting the weekly supply first, then pulling back, because the weekly supply is in control, which could easily break a 4-hour demand zone. Hopefully that makes sense. There is, some psychology to this trading. It's not just all technical analysis. We have to be aware of this and not just get married to a setup and all that trading psychology. I can definitely help you guys with that. And that's by listening to my Stoic Trading Psychology podcast. Anywhere you get your podcasts. Also made a YouTube channel for it as well. Check it out. Lots of gems in there as far as trading psychology goes. Definitely recommend listening to that podcast. And I just wanted to check something quick. I haven't noticed here. I was going to say this 4-hour, if we go back here, this weekly supply over here, the 4-hour supply zone that's above, it's not bad, but this 4-hour supply above, this is actually inside of that weekly supply. So if we are going to, out of both of these 4-hour supply zones, which they're both very good zones, I think this one you could short, but I'd be aggressive with trade management due to the fact that the weekly supply is sitting right above with a better 4-hour supply in it. And I think that we could see the bigger move off of that 4-hour supply at 1.40. So a couple good 4-hour supply zones here if you are bearish, but again, aggressive trade management off this first one, and you could see a bigger move off of the one above, and that's if you're bearish. I always like to point out potentially both sides of the equation here, and that's what we're doing here on the USDCAD. All right, moving on to the forecast for the Aussie US dollar. On the daily chart here, this daily trend line is currently being tested. It's not looking great. I will definitely say that. So it's definitely, we could see this trend line break, and for not only because we are testing it right now, and we're kind of sitting almost below it, because it was an aggressive trend line anyways. So that's kind of why we are seeing that potential break there on the daily chart. It's not broken yet. On the 4-hour chart, we actually just broke this trend line. We have in 20 seconds, it's about to be broken. So we are going to remove the trend line there. And now we are going to draw a supply zone above, and it's actually not a bad zone. Earlier, like on the pound, we had a very similar trend line. And like I was saying, there was really no supply that removed it. Here, we have a blatant supply zone at 0.672. So it is a little bit aggressive because it's technically counter trend to the daily. But if you do think we're going to be turning around on the Aussie, this will be our supply zone for a short trade. I think it's not bad. It broke a trend line, broke some sort of buying pressure here, potentially. So it's a great zone, in my opinion, at 0.672. And again, if you don't feel comfortable with just an entry, stop, and take profit, you could just be looking for confirmation in there on a 50-minute time frame to confirm your entry, narrow down your entry. But at the end of the day, it's great basing. The move away is pretty good. I like that it removed the trend line. Definitely not a bad zone. And that's really all I'm seeing right now on the Aussie. As far as how big of a move we're going to get off this zone, difficult to tell. So I would be semi-aggressive with trade management, meaning don't just set your take profit down here and don't manage your trade at all. Since the daily trend line's up, and due to the fact that there's really no clear direction on the weekly, it's kind of uncertain what's going to be taking place. So if we do get a small move, I think it wouldn't be bad to move your stop to half risk, or look to take a little bit of profit off and move your stop to break even. Not get greedy, right? Maybe not just look for a massive move, because there's, if we had a weekly downward trend and a daily downward trend and we were getting a nice pullback and we're at a good point, yeah, I think shoot for the moon here, shoot for a big trade, but I'm just not really seeing that right now. But at the end of the day, pretty good zone there on the 4-hour chart. I like it. Definitely pretty decent zone there for shorts on the Aussie US dollar. Moving on to the forecast for the USD Swiss. Beautiful move to the upside here. We have our daily supply zone sitting above, which I love to see, because this shows profit margin, and it just, I don't know, just when I can see the profit margin on the higher time frame, I don't know about you guys, but it just gives me so much more confidence in the setup. Let me know what you guys think about that in the comments down below. So if we are going to get in long on the USD Swiss, our profit margin is up to this daily supply. It doesn't mean that this supply is going to react off of it. It just means like you might see a small move before you end up breaking it, and we could give back all your profit here. So it's definitely a time to, once we hit the supply, maybe look to lock in the trade, maybe take some profit off, maybe move your stop to break even, whatever you got to do. I mean, it wouldn't surprise me to see more strength in the US dollar and really break this supply, target the liquidity above. It's definitely an area where we could hesitate, and that simple hesitation doesn't look like a big move, but it could definitely it could give back all your profits, which you don't want to be doing. So as far as longs go, we have clear profit margin to the upside. And we have really, I would just say one option right now. I don't really want to draw that demand zone there. It's not my favorite zone. It's tricky. But for now, we have a nice trend line to the upside. Channel view shows we are very overextended. We are sitting above the channel. So I'd rather be waiting for 50% mark or below to continue to look for longs on a 15-minute chart. Again, let me know what you guys think in the comments about my channel tool. Has it made things more clear? It's something I've been adding into the weekly Forex forecast and in my own work, in my own trading. It's helped so much. It's just, I can't believe I wasn't using it before. It's a great visual aid. Let me know what you guys think in the comments about me adding this in. So again, I'd rather be waiting for a pullback to continue to look for longs on a 15-minute time frame. I think that makes more sense. As far as a 1 hour chart goes, we are very extended. We were very overextended here as well. A pullback down this demand zone could be okay. It's not my favorite zone. It's just so far away now. What I would like to see is some sort of liquidity here, right? Telling us there's support, stop losses below. That would give me more confidence in that setup. So that would be our pullback entry long on the 1 hour chart. If you want to wait for that, I don't know. It's just, price is so overextended. It's kind of hard to trade a market like this. But for now, nice little pullback entry to that demand zone could be good. And then, like I said, maybe wait for a pullback to a better part in that channel and continue to look for longs with profit margin up to 0.805 to that daily area of supply. Alrighty, moving on to the forecast for crude oil. And if you guys are on Instagram, follow me on Instagram at FX Telepath. Send me a message. Say, hey, Kevin, what's up? I literally respond to all messages unless you guys are trying to get me to buy something or whatever. I don't know. I get so many scam messages all the time, basically saying, hey, scam your audience with our broker. It's crazy. I should start a thread of how many scam brokers I get offered. It's crazy. Anyways, so follow me on Instagram there. On the weekly time frame, we have our clear area of support here and the weekly demand just below it, which is an area I will be looking to purchase on lower time frames, looking for confirmation. So again, subscribe to the channel. If we do get a pullback down to that zone, I'll be talking about it, looking for some potential good swing trading opportunities. So we did target the liquidity here a little bit, and now we are reacting to the upside. So I personally think this move on oil could be short-lived due to the fact that we haven't really fully targeted this liquidity, and I think that's where we are headed. So it doesn't mean we won't see more a bigger move to the upside, but I think it's just not going to be a massive move. So I'm going to point out a long setup here, but aggressive trade management is needed here due to the fact that we have clear liquidity to target down below, and that's just my higher time frame bias. And even on the daily chart, we have a daily downward trend line that's still being respected. I know this isn't looking great, but in my opinion, it is still being respected. So we have to respect this trend line as long as it is continuing to hold. So as far as trading crude oil goes now, we had this supply zone, which again, I called out many times before the trade took place. I'm sure you can go back and confirm that by watching these weekly forecasts. Go back and watch the older ones. We removed this supply with a demand zone down below, and I was liking this demand zone today as it was forming. The issue now is look at this aggressive pullback. I don't like that. So I would like to see another push up, then a pullback to that zone. I think it could be better at 58.23. So if you are going to get in long at the zone, I personally think aggressive trade management, 1-to-1, maybe a 2-to-1 trade off of this zone is much better. Look to move your stop to break even as soon as you can. It's definitely going to be better. Again, due to the higher time frame nature here, I just think it's going to be a quick move. So it's not a bad zone. And then there is a supply zone above at 60.06. It's okay. It's just, I don't know. I don't like this here. It's not the best zone. If you want to get aggressive, that would be our short trade. I'm probably going to be avoiding it. I think the better short trade would be to wait for this demand zone to be removed. And if there's a supply zone there, that would be our short trade. That's what I prefer. So for now, you could either be aggressive trade management in here, looking for confirmation on a 15-minute time frame, I think as well. Makes sense here on crude oil. Alrighty, on to the forecast for Bitcoin, last but not least. On the weekly time frame, I absolutely love this weekly chart. I've been talking about it for a while now. The issue is we are sitting literally right in the middle of supply and demand. I think we will be headed lower on Bitcoin. That is my suspicion due to the fact that we have clear liquidity down below. That relax, Bitcoin bugs and bulls. doesn't mean I don't think Bitcoin's going to go up. I actually think this is a great buying opportunity, basically from 73,000 to about 58,000 there. I think it's a good time to be looking for longs on Bitcoin in that area after we target that liquidity. On the daily chart here, we did have a daily downward trend, which was showing us, hey, that's the direction. That's where we're going to be going. But we clearly have broken this trend line. So there's a lot of indecision right now. Very tricky to determine where price is going to be going. But doesn't mean we didn't catch a beautiful short trade on Bitcoin right there. This was called out in last week's weekly Forex forecast. So another great reason to hit that subscribe button and that like button, guys. It's literally free. Why wouldn't you when I'm calling out these trades before it takes place? And I was even calling out, like, full transparency here, I was calling out this supply zone as well. And we blasted through it. But this is the reality of trading. Letting your risk reward play in the long run. Let's say you traded short at this zone. Loss, big win, 4-1, 3-1 hit. Now you're up 1%, 2%. That's the reality of trading with good risk rewards. And I mean, look at that. Almost no drawdown from that short trade as well. So just a great trade, again, called out before it took place. No hindsight analysis here. So as far as trading it goes now, we did get obviously very hyper extended here, but as long as this trend line's holding, we could justify looking for longs on a 15-minute chart. And that's almost it here on Bitcoin. On the 1-hour chart, I just don't really see much going on. Technically, actually, we have a trend line here. Not my favorite trend line. I don't like drawing trend lines with wicks, but technically an upper trend line, just, I don't know. This is just such a weird looking chart right now. I don't like the 1-hour chart. The 4-hour chart's pretty clear to me, but the trade's kind of already worked out, guys, and that's the reality. I can do these forecasts, and there might not be any setups, or all the setups happened last week, and that's kind of the situation with Bitcoin. So for now, we definitely want to be monitoring this upward trend line on the 4-hour chart. You could justify looking for longs, especially since the daily trend line's broken. Justify looking for longs, but if the trend line breaks, any supply is going to be a nice trading opportunity, which we will be discussing for the Diamond members throughout the week. If you guys want access to my full-length forecast, join the Diamond membership where you will have access to that, as well as my daily market forecast, the full course supply and demand PDF, and much, much more. Make sure you guys subscribe so you can catch next week's forecast as well. And I always appreciate a like. Thank you guys, and I'll see you in the next video.